My name is Andrew Stotson. I want to welcome you to this Valuation Masterclass Bootcamp presentation. What you're going to see is a presentation of one of my students, in this case from Nigeria, who's going to be presenting her work. This is the capstone project, the fourth valuation that the students do in the Valuation Masterclass Bootcamp over 12 weeks. They come in knowing very little about how to write a research report, and they finish with 4 high-quality research reports that they've completed. If you want to build a competitive advantage in company valuation, I hope to see you in the next Valuation Masterclass Bootcamp. In fact, the next one starts in 13 days. You can get a $1,900 discount right now. This offer lasts for 7 days. Scan the QR code and use BC23 Live to get that discount. Without further ado, here is Chineye. Yeah, as best as I can pronounce it. Okay, so what time is it there, by the way?
10:30 a.m.
Oh, okay, not too bad. I had one of my students do their presentation at about 4 in the morning, and I felt so bad. But okay, and how many hours do you think you spent working on this one report?
I would say about not less than 50 or 60 over the 2 weeks, because there was a lot of research. Like the report writing itself might not be a lot of time, but actually the research, finding the stories and the drivers of the valuation takes a lot.
Definitely. And why did you choose this company?
It's a brand, it's the owner of a brand that I know, and I have memories like of taking ice cream after church, and I found out they are the owners of the brand, the parents company. And then also I was fascinated by their commitment to sustainability and just health nutrition generally, and it piqued my interest.
A good churchgoer. Of course, I only went to church because I got a reward like ice cream afterwards, but that was the only reason why the only way my parents could get me to go, because I was so antsy in the church. But that's good. In fact, I see a lot of my students in Nigeria are very, and other countries in Africa are very serious about church. Well, I am excited to get going with this. So let me bring up your presentation 1 second. So now we see your presentation on the screen and we see you and me, but we're not going to see me for much longer. I'm going to exit in just a moment. And as soon as I do, you just take it away. You ready?
Yes, I am.
Okay, I'm exiting now, so take it away.
Okay. Thank you. When you hear the words food, health, and nutrition, only one company should come to mind, and that is Danone, the French multinational organization that is leading the health and medical nutrition revolution, and the topic of our valuation report today. Hello, my name is Chineye Denta, and I initiate coverage on Danone with a buy recommendation based on a target price of €83, implying an upside of 22%. I derive this target price from a free cash flow to the firm-based valuation using a WACC of 7% and a terminal growth rate of 2%. The major highlights that support this valuation are the investment in health-focused products that drives top-line growth, emerging market expansion puts FX pressure on earnings, and continuous innovation keeps long-term earnings stable. The risks that Danone faces are the high exposure to FX volatility, China's shrinking baby formula markets, a failure to successfully integrate their acquisitions, and regulatory compliance hurdles. But where did Danone's story start? Well, Danone was founded in 1919, and their story began with a single pot of yogurt that was sold in Barcelona. Today, the company operates a health-focused portfolio across 3 fast-growing categories and has customers in over 120 countries. Under the renewed Danone strategy, the company is committed to increasing its business growth with social impact. Looking at the 3 key stories, we can see that currency pressures dampen health and nutrition gains. The first story is the investment in health-focused products that drives top-line growth. In line with the renewed Danone strategy, the company has completed a series of science-backed acquisitions over the past 2 years to strengthen its position in health-focused nutrition. The most significant one was the acquisition of the Acamantia company, and that company is the developer of the MUCT strain, which has been proven to improve gut barrier function and reduce inflammation. Why is this important? Well, according to Modern Intelligence, health and wellness have become a key structural driver of the global organic food and beverage market. As a result, based on these acquisitions and industry trends, I forecast that gross margin will expand to 51% and EBIT margin will improve to 14% by 2027. Looking at emerging market expansion, we can see that that's putting pressure on FX and FX pressure on earnings. Expansion in emerging markets, particularly in Asia Pacific, exposes the company to foreign exchange volatility. In the first half of 2025, Danone achieved a 4% like for like sales growth, but their reported sales declined by 0.1%, and that was mainly due to negative currency impacts and scope effects. As a result, despite their strong volume and also their leading position in health nutrition, I forecast that overall revenue growth will remain capped at 3% for the forecast period. Finally, we have that continuous innovation keeps long term earnings stable. Danone has maintained a long track record of product innovation, and since 2021, the company has invested more than 200 million euros in innovation and also has plans to launch 40 new products annually focused on health and sustainability. These initiatives support an elevated earnings forecast despite the FX pressures, although they also contribute to higher SG&A costs as the company continues to invest in innovation. Looking at the industrial analysis, we can see that wellness is now on the food and beverage industry's menu. The global food and beverage industry is one of the largest and most structurally resilient sectors in the global economy. According to Model Intelligence, the market is estimated at 14 trillion euros and is projected to reach 17 trillion euros by 2031. The industry is dominated by large players like Nestle and PepsiCo. And one of the key trends that is shaping it is the shifting consumer preferences. Indeed, consumers are actually demanding for healthier food options. A survey of European consumers indicates that around 60% are actively trying to eat healthier, and 75% of consumers are willing to pay more for products that are free from synthetic additives. This indicates that there's some upside for organizations to take advantage of if the rising raw material and input costs that are a persistent headwind don't get there first. The rising raw material and input cost is most acute in emerging markets and is driven by higher prices for agricultural commodities, energy, packaging materials, and logistics. However, larger food and beverage firms are using selective price increases and other methods to stabilize these rising costs. Looking at the quarterly report, we can see that margins held steady in the full year first half of 2025 as profitability eased. In the first half of 2025, revenue remained broadly flat with a modest 1% increase compared to second half of 2024. Despite the steady EBIT growth of 4% year on year, net profit declined by 15% year on year, and recurring EPS was also 2% lower year on year, indicating continued pressure on bottom line earnings despite the resilient operating performance. For latest news, we can see that Danone has been facing some headwinds. The Their share prices fell by over 5% after BOFA warned that China's declining birth rate poses a structural risk to infant formula demand. And they also had to pull more products, formula products, as due to the potential cerealide toxin contamination. And markets reacted to these activities with deep share price drops. But they've been investing in new plants as they invested 3.4 million euros in a Texas plant that was aimed at meeting the rising demand for high protein dairy products like yogurt. Moving on to the constraints to growth, you can see that that's neutral. Capital is a minor constraint. Danone's balance sheet has strengthened over the past few years. In 2024, the net debt fell to 9 billion euros, and the company reported a record free cash flow of 3 billion euros. This means that Danone has adequate room to keep funding their capex and brand investment without relying heavily on equity issuance. For operations, that's neutral, and that's because their renewed Danone strategy has helped to sharpen their execution and portfolio focus and productivity. For markets, you can see that that's neutral, and that's because of the market outlook being mixed. Demand for health and medical nutrition is on the increase, but as we've noted, China's birth rate is declining, and external analysts have flagged that the birth rate slump could slow infant formula outperformance over time. For people, it's a minor constraint, and that's because Danone is deliberately reinvesting in capabilities and brand support. Looking at the revenue, we can see that EDP makes up 49% of sales. In 2024, Danone reported 24 billion euros in sales, representing a 4% increase on a like-for-like basis. The company's revenue is divided across three main segments: the essential dairy and plant-based products, which make up 49%, specialized nutrition, which makes up 33%, and waters, which makes up 18% of revenue. For FVMR, we can see that Danone is moderately attractive when compared to 240 non-financial companies in franc. Fundamentals, it has an average rank. For valuation, it's unattractive. Momentum, it has a top 30% ranking driven by improved earnings and stabilizing margins. And for risk, balance sheet risk is average and price risk is low, which results in an above average ranking for risk. How does Danone compare to peers? Well, looking at Porter's five forces, we can see that their competitive advantage is hindered by high competitor rivalry. Danone has an overall score of 65%, which is not so good. And major reason for this is their low competitor rivalry, which is at 53%. The major reason why it's this 53% is because the company has major rivals across across its different categories. And even though its rivals in specialized nutrition are fewer, they are still major rivals. Looking at the bargaining power versus suppliers and bargaining power versus customers, you can see that Danone possesses a strong bargaining power versus suppliers. For bargaining power versus suppliers, that is at 80%, and it's because there's no supplier that has a strong control of inputs that the company needs, and switching costs are feasible, but it's not frictionless. For bargaining power versus customers, we can see that that's at 53%, and that's because customers have many alternatives. And the key difference between the products, whether in EDP or specialized nutrition, is the product differentiation. For threat of new entrants versus threat of substitutes, you can see that high threat of substitutes inhibits their competitiveness. Threat of new entrants is high at 80%. They have a good score. And this is because entry is possible, but there are economies of scale that larger organizations have that the smaller companies, if they enter, do not have. And for threats of substitutes, you can see that switching costs are generally low in most Danone categories, but and customers are usually highly price sensitive, and we can see that this results in a score of 60%. Looking at the team, we can see that the chairman is Jill Schnepp and the president is Antoine de Saint-Affrique. We can also see that Danone has a board composition of 91%, which is far above the average in France and in Europe. And their total top 10 shareholders, hold about 36% of the company. Moving on to world-class benchmarking, we can see that profitable growth has shown modest improvements in the most recent years. Profitability and growth both fell sharply in 2022. However, over the past 12 months, profitability has improved to the number 5 rank, while growth has rebounded more strongly to number 3. For asset efficiency, that has consistently weighed on profitability, ranking in the bottom decile throughout the period, while strong expense control, which ranked, but this weakness has been offset by strong expense control, which ranked third over the past 12 months. For revenue growth, you can see that that slipped to number 8 in 2024, and expense direction has improved remarkably, moving from a number 10 position in 2022 to number 2 in 2024, where it has remained for the past 12 months. Looking at it in more detail, we can see that profitability is stuck at the average position, growth is climbing to a top 3 rank, asset utilization is stable near the bottom, net margin is having subtle downward movement, sales growth has a below average performance, and net margin change is holding the top 2 spots. For ESG, Danone is a company that is very committed to its ESG goals, and we can see that it has an overall score of 87%. For environmental, it's at 60% because even though they have a strong resource reduction policy and take plans to reduce their emissions and waste, they have faced environmental controversies due to allegedly omitting their plastic usage. Looking at social, they have an overall score of 100% due to their health and safety policies and human rights policies. And for governance, they have a score of 100%, which is very good. Looking at the valuation, I forecast that revenue growth will improve to 29 billion euros by 2029. And I also forecast that the cost of goods and services will not rise much and will be relatively stable as the company has committed itself to being operationally efficient. This results in gross profits being at 15 billion euros by the end of the forecast period. For total assets, I don't forecast much change in total assets because the company is mostly focused on acquisitions and innovation. So there's not going to be much increase in their long-term investments or much change in anything. Looking at liabilities and equities, you can see that total liabilities trends downwards, and the company is expected to fund their next phase by their strong free cash flow that they have at hand. Looking at operating cash flow, we can see that that has some swings, but that's mostly due to changes in their net working capital, not due to operational inefficiencies. For capital expenditures, we can see that that stays relatively the same because the company is mostly going to be investing in innovation. Moving on to ratios, we can see that EBIT margin, I forecast that that's going to be moving upwards for the period as the company is investing in higher value segments such as the specialized nutrition and health nutrition. And we can also see that that leads to increase in their return on average assets as well. Moving on to revenue, I also forecast that their reported sales is going to be increased, even though they are having FX pressure. I forecast that their reported sales will be increased and it will become positive in 2027. For free cash flow growth, we can see that that is going to be a little bit destabilized, but that's mainly because of changes in the net working capital. Looking at relative valuation, we can see that on the forward 2026 PB multiple, Dano trades at a discount relative to all its peers, and I forecast that their return on equity will be 12%, and the result is a PB to ROE multiple that stands at 0.19x. However, it's important to note that all the comparables from its peers all cluster around 0.2x, so the difference between this is quite negligible. Moving on, we can see that the PE to growth, that Danone's 2026 EP multiple is forecast to be at 19.4x, and I expect that the EPS growth will improve, moving from a negative 2% position to 5%, and this will result in Dano trading at a premium to its peers globally and in Asia, and but it will still be less expensive than peers in France. For the valuation and target price, I assume a market risk-free rate of 2.5%, which is consistent with long-term French government bond yields, and a market equity risk premium of 10%. I also use the free cash flow to firm methodology as it best captures the company's steady cash flow generation across various cycles. And based on this methodology, I derive an equity value of 83 euros, which implies a 22% upside. Looking at the sensitivity analysis, we can see that if gross margin was to improve by 2%, we can see that it will result in a free cash flow valuation of 87 euros. And if it was to decline by 50%, it would result in a value of 79 euros. Why is this important? Well, looking at the major risks, we can see that the high exposure to FX volatility is their main risk. And Danone earns a significant portion of their revenue from Asia Pacific and Latin America. And they also report their US and Latin American sale in euros, which exposes the company to foreign exchange fluctuations. So they do not have if they do not if there are any changes, macroeconomic instability, inflation spikes or currency devaluation, it will materially impact their profits, cash flow and the company's ability to fund growth initiatives or acquisitions. I hope that none of these will happen, and I believe that Danone is going to be continue to be at the forefront of the health and medical nutrition revolution. I believe that this company is investing highly in making sure that their market position is sustained. Thank you.
Great. All right. First question from Moment. He says, how much of the 22% upside is at risk following recent global product recalls?
Okay, thank you so much for that question. I would say not much, mainly because the the recalls were due to the formula recalls, and even though that this is a major thing, the specialized nutrition and their investment in innovation, along with their investment in health focused products, is going to outweigh any negative impact that would have been due to the infant formula recalls.
And Lee says, I like the company, but what do you view as its number one risk to a decline in stock price?
For the decline in stock price, I would say that the major risk will possibly be, aside from the high exposure to FX volatility is mostly in respect to their value, but I would say for their price, it would be maybe the regulatory and compliance hurdles that they are facing because countries across the world are tightening their regulatory and compliance when it comes to specialized nutrition, which can actually negatively impact the company's moat and also the company's core differentiation in their products. And as a result, I believe that this can negatively impact their price in the midterm.
Excellent. One of my good old friends, Cedric, is asked a question: what has been the impact of the departure of Emmanuel Faber on the corporate strategy and ESG focus?
Well, I didn't notice any of that in my research. Most of what I noticed was that Danone has continued to commit itself to innovation and also positioning themselves as a company that prioritizes sustainability. So I didn't notice much departure when I was researching.
One of the questions I have is that sometimes when I look at the brands in a supermarket and they talk about being healthy and all that, I mean, I eat basically meat and vegetables, just normal stuff. And then I look at the different products and they talk about being healthy, but are they really healthy? Sometimes they're packed full of sugar or sugar substitutes. Sometimes they remove all the fat so you don't actually get the fat that you need. Sometimes they remove a lot of fiber. And I'm just curious, is it really healthy?
Mm, I would say for I would say I have a similar issue when it comes to picking food, as you said, in the supermarket. I might not be able to decide, okay, what truly is healthy. But I would say for a company like Danone that has committed itself over and over again to ensuring that they believe in health in food, and they ensure that any food that they are producing, any products that they have in their line is as healthy as possible and is the best for their customers. So I believe that they should have a healthy line. And I don't want to sound too much like I'm for the company or
Mm.
position in the company. So I believe they should have a healthy line. But aside from that, I would say that that is a major risk for them too, because customers might not be able to believe that truly what they are selling is a true health focused product. So one way in they can do that is to partner with maybe influencers and of a show more targeted results when it comes to their products and show
Okay.
the impact of the product.
And one of the questions from Moment is 6.5 weighted average cost of capital realistic given the high foreign exchange volatility and the execution risks of the current restructuring? It is pretty low at 6.5. Maybe talk to us about why you use that and what's the risk that it's too low.
Well, I used it because I felt it was more in line and more representative of the company's free cash flow. That was what I was using because the company has been having positive like for like sales growth, even though the reported sales growth has been kind of low. And I focus that even though, yes, their reported sales is declining due to the FX volatility, the like sales growth will still be on the increase, and due to the improved health nutrition and focus on healthy foods and healthy living, I believe that that will offset any of the FX volatility and any of the restructuring risks that they have.
Um, Arush was talking about margins, and he's talking about maybe margins are improving from short-term cost cuts rather than structural efficiency. Is there really an upside in margins? I'd like you to go to the ratio page, and I want to look at the ratios and build on the question that Arush has just asked. Let's see. Okay, so the gross margin is already very strong, let's say at 50+%. It's hard to see that the company can increase its gross margin. Now, EBIT margin at 13 or so, it could improve a bit from here, but you're not forecasting major improvements. So I would say, based upon what I'm seeing, you're not expecting, any significant improvements in margins. Would that be correct to say?
Yes, it is.
Okay.
Yes.
And now let's go to the next page and look at the revenue growth. Maybe yeah, there we go. So we've got kind of a ceiling on margin. Maybe EBIT margin could go up a bit. but we got very slow growth. Now go to the next page, the free cash flow to the firm page. And let's look at the free cash flow. Now, if you look at the free cash flow to the firm in 2024, it was 3671. And if we go to 2029, we see it's 3610, about the same, even down slightly. So given the fact that, there's some constraints on the upside for margin, it's a relatively slow growth, very large company. And you're forecasting that free cash flow is going to be about the same in 1, 2, 3, 4, 5 years from now. Why buy?
Well, for me, the major reason why you should buy is the health focused nutrition. When researching, I noticed that there was such a shift, and the consumers are definitely wanting to eat healthier. There's such a shift in wellness also. People are more aware of what it is that they are putting in their body and how it is that they are spending their time, and just becoming healthier generally. So as Danone is shifting and making sure that their products match that changing consumer mix. And also, they have been a company that has also prioritized health in food for a very long time. So they already have that brand credibility. I believe that that will ensure some upside. But as you can see, based on the forecast, I don't believe that this upside is going to be something that is long term or durable. Mainly because the company is not having anything. When what I noticed was the company does not have any new products or anything that is really differentiating them from other organizations in the market. So, say maybe their competitors will be able to leapfrog them, or maybe someone is going to be able to take over. I don't want to seem too optimistic, but I do think that the health shift focus on health food is is the major driver.
Okay, how does it feel to graduate from the Valuation Masterclass Bootcamp and finish this presentation?
It feels so exhilarating. Like, I'm so happy and I'm really proud of myself. I'm really grateful for the team, Mr. Lee, Mr. Moment, and everyone. Yeah, and
And
you too.
sure. And how would you describe the difference between when you started in the boot camp versus where you are today?
Confidence, that's the main word. I'm way more confident now. I feel like when I first watched the presentations, I think for Fastenal that first time, I was confused. I was like, how could someone like in class with me, in my team, be doing this presentation? And I challenged myself that by the end of the program, I wanted to also present. And it took building a lot of confidence, took a lot of time, but mainly just improving myself and understanding that I can do hard things basically.
When I describe the Valuation Masterclass Bootcamp to people that don't know anything about it, they say, what's unique about it? I said, well, you're going to basically write 4 professional reports on 4 different companies and make videos presenting them. And that will build your confidence and your knowledge. The second thing is I say that you'll be mentored by me directly, where it's not just videos, but I'm involved with my students. And then the third one is that you'll be tested under pressure. If you don't meet the deadlines, you'll be kicked out. And that writing of the 4 reports, as well as surviving under pressure, builds tremendous confidence. Is there anything you would add from your experience to those 3 points that I talk about?
I would say community also, because you can't go through the boot camp alone. You need friends, you need your classmates to like, oh hi, running into this issue. You need Mr. Moment and Mr. Lee also say, oh please, this valuation, I'm having an issue with it. So mainly community also, I will add.
Yeah, I mean, that's one of my favorite parts of it is seeing graduates participating in the education of the next group. And that's just exciting because it feels like I'm creating something that has lasting value.
You are.
Yeah, it's exciting. In fact, unfortunately, you're not in Bangkok tonight, but we're going to have 18 students who recently graduated from Bootcamp 23. They're going to come to my house for a little party. And we have another roughly 15 students who are prior graduates going back all the way to one of them from boot camp number 3, who come
Wow.
to meet other students, to meet me, to spend time together, and to continue to build our community. So I want to welcome you into this community and hope that you will contribute also to the next batch and future ones that come along. You've got a lot to give from what you've learned.
I do. I will. I
Great.
look forward to being part. Thank you so much.
All right. Well done. I'm very proud of your work, and I'll see you in Slack, and I'll talk to the audience for a couple minutes. Take care.
Bye.
Yep. Well, another great presentation. Remember, if you want to build a competitive advantage in company valuation, you got 13 days to the next boot camp. Make sure you join us there. My name is Andrew Stotts, and I want to encourage you to build a competitive advantage in company valuation.